Good evening, everyone. I'm going to take my session with the title, How Fear and Greed Affect Our Decisions. So the psychology of investment, how fear and greed affect our decisions. As I mentioned, it is emanating from an article that I authored in 2019 when the financial crisis had begun. As you may be aware, I think 2018 is when we had the first collapse of UT and Capital Bank. And since that time, until around 2020, financial institutions have gone under the red hot knife of the financial regulators in the country. So we're going to look at how fear and greed affect our decisions of investment. All right, so it's going to take with this context, with this outline. So we're going to have an introduction, the wisdom of Warren Buffett, fear and greed index. There is a fear and greed index, yes. Dangers of greed, the Ghana situation, the importance of understanding, and some key takeaways from the whole presentation. So in this presentation, we'll explore the psychology of investing and how emotions such as fear and greed can impact our decisions. We'll also discuss the importance of having a sound investment plan and avoiding being swayed by market emotions. So the first point is, is a quote from Warren Buffett himself. And he says, be fearful when others are greedy and when others are fearful. Okay, so Warren Buffett is one of the most successful investors of all time. He's also known for his wisdom and insights into the market. His famous quote, be fearful when others are greedy and be greedy when others are fearful, captures the essence of constrained investing. This means going against the prevailing market sentiment and buying when others are selling and selling when others are buying. So looking at the Ghana condition, the Ghana situation currently, so we can all attest that in the market right now, the market is a bit bearish. Okay, we have a lot of sellers on the market, prices are going down and so on. So in a situation like this, what an investor should do is to investigate. Why is all this happening? You don't follow what everybody is doing. The best thing to do is to investigate. But Warren Buffett is telling us that we should be greedy when others are fearful. So the moment when plenty or a lot of investors are running away from the market, that is when you should look at opportunities. You should fish out opportunities in the market and hop in. Okay, so in this current situation, again, a lot of the banks, all right, we saw the DDEP, we saw a lot of sellers or selling in the market. And in that situation, the prices of most of the banking stocks were dropping. Even though with careful analysis, as we all saw, even with the stock pitch competition participants, there were a lot of the stocks that they came out to boldly say that these are stocks that we should buy. For example, is Access Bank, which was analysis was done by Stephen Appiah. All right. So in his analysis, he is projecting that in the next 5 years, the stock should rise to more than 20 Ghana cedis from the current trends. So in every situation, we need to investigate. So when a lot of people are running away from the market, that is when you should just calm down, watch what is happening, investigate, do your own analysis, and hop in. So it is important that you remain very greedy when others are fearful, and we are fearful when others are greedy. So in the other way, a lot of people were buying into men's gold. A lot of people, yes, so interests were high. They were not even doing any investigation, we were conducting any analysis. They were all running into that side of the investment. At the time we realized it collapsed. It is important that we remain fearful when a lot of people are running into an investment. So that's what this quote means by Warren Buffett. And we have what we call the Fear and Greed Index. This is normally published by CNN. So with the CNN Money's Fear and Greed Index, it was established to measure investor sentiment. The index is based on 7 factors, including stock market volatility, junk bond yields, and puts and call ratios. A high reading on the index suggests that investors are greedy, while low reading suggests that they are fearful. So the Fear and Greed Index is a tool that can be used to gauge investor sentiment. It is important to note, however, that the index is not a perfect predictor of future market movements. So from the graph that we are seeing here, the red side is the fear. All right. So you need to gauge yourself how you want to be fearful about the market. So I gave an example of what is happening in our market now. It is experiencing a mixed performance. Okay, experiencing a mixed performance. And with such mixed performance, you need to be careful, or you need to be very meticulous about what you want to do in the market. So the dangers of greed. Greed can lead investors to make poor decisions. When investors are greedy, they may be more likely to take an excessive risk or invest in assets that they don't understand. This can lead to significant losses. Greed is a powerful emotion that can cloud your judgment. It is important to be aware of the dangers of greed and to take steps to mitigate its impact on your investment decisions. So with the example of the men's gold, everybody was rushing into it. Okay, everybody was rushing into it without even conducting any analysis. So we're greedy at the time. So the question is to ask yourself, which investment is this institution going to invest in to yield 50%, okay, on a monthly basis? So such returns are mind-boggling, and it's sometimes you don't need to even ask questions. You look at it and you just don't go for it. Okay, there were some Ponzi schemes, investments that are yielding, let's say, 15% a month, and you have a lot of people running into them. So we have to be mindful of the dangers of greed. Okay, since it can cloud our judgment when we are making investment decisions. Now, I gave examples of the Ghana situation. So specifically in 2018, there were a number of investment schemes in Ghana that offered very high returns. The schemes were too good to be true. Many investors lost money when the schemes collapsed. This study highlights the importance of doing your research before investing in any assets. The case of Ghana is a cautionary tale for investors. It is important to be wary of investment opportunities that seem too good to be true. Always do your research before investing in any assets, and never invest in something you do not understand. So Warren Buffett also made this statement some time ago, saying that you shouldn't invest in an asset you do not understand. Even though he himself he had his own regrets, but at the time that Google and Amazon were coming into the market, he made a comment that because he did not understand, he did not hop into the market at the time. So he regretted not going in the market early. Sometimes it happens like that. It may not be all the investments that you understand, okay, but you try and get into it. Try and get some people to explain to you before you hop into it. It is dangerous, even in our everyday lives, if you want to go into a business. If you don't understand the business, why do you want to worry yourself into going and wasting your money? So it's important that we investigate, we take our time to do our research, then we can enter into the market at a time that is good for some returns to be earned. And we have this one that says the importance of understanding. So Warren Buffett's first rule of investing is Okay, so I just mentioned this one. Never invest in something you do not understand. This is sage advice that all investors should heed. If you don't understand how an investment works, you are more likely to make a bad decision. Before you invest in any asset, take the time to understand how it works. So this includes understanding the risks involved. If you do not feel comfortable with risks, it is best to avoid the investment. So in Young Investors Network, we take our time to train students. We train students, all right, to understand investment assets. Okay, I think there was even a time that we took some students through forex trading. So all these things, we want to open the mind of students for you to understand. In understanding these assets, it is possible that you also advise a family member, a friend. Okay, you explain to people who do not understand, so that gradually we'll have a society of investment savvy people. Okay, so it is important that you take this advice to very, very seriously. It is important to understand. You do not invest in something that you do not understand. So those who are just going into betting, for example, a lot of people think they understand the business of betting. But if you go deep into it, it may not be an area that you even want to go into. Okay, so in all aspects of investment, be it cryptocurrencies, forex trading, betting, buying stocks, buying fixed income instruments, and all over, you need to understand the investment. Fixed income investment, long-term investment, stocks, bonds, all the assets. So with the young investors, we train students to understand these areas so that we can help the society as a whole. So the next slide is the power of a plan. So having a sound investment plan can help you avoid making emotional decisions. Your investment plan should be based on your individual risk tolerance and investment goals. Sticking to your plan can help you achieve your long-term investment goals. So developing a sound investment plan is essential for any investor. Your plan should be based on your individual circumstances and goals. Once you have a plan in place, stick to it as much as possible. This will help you avoid making impulsive decisions based on market emotions. So simply, you have to have a plan. There has to be a plan, okay, for yourself. When you enter any investment firm, we have what we call the know your client. So know your client, we make an assessment of you yourself, the investor. So from the assessment that we'll make, it's like going to the hospital, all right? We will diagnose you and they will diagnose you and come out with what is really wrong with you. Okay, from the discussion that you have with the doctor will prescribe medication for you. It is the same with investment firms. So after going through your profile, understanding your needs, okay, understanding your risk profile, then we recommend an investment asset for you. Normally, investment assets are not recommended as a one flat decision that we make for you. So sometimes we do a blend. All right. We have what we call the mixed portfolio. Okay. I have one is skewed towards high risk, low risk, and so on. So it is important that you do a self-assessment. With a self-assessment, it can help you draw a plan. And with the plan, you'll be able to determine which assets or asset mix will be good for you in making your investment decision. And we would like to conclude with these few takeaways. All right. Fear and greed are powerful emotions that can impact our investment decisions. It's important to be aware of the dangers of these emotions and to take these steps to mitigate their impact. Having a sound investment plan and doing your research before investing can help you make better decisions. And you have to remember that you have to be fearful when others are greedy and be greedy when others are fearful. This is a quote from Warren Buffett. Investing is a complex and challenging endeavor. By understanding the psychology of investing and taking steps to manage your emotions, you can increase your chances of success. Thank you very much for your attention, Jessica. Please, you can take over.
Thank you very much, Mr. Kyei. We are very grateful for this wonderful presentation. So at this point, we would open the floor for questions. If you have any question, kindly raise your hand, or you can type it in the comments and I'll read it out in case your background is very noisy. Please, Mr. Kyei, we want to know if we can have access to the slides, even though the video is going to be on YouTube.
And I'm going to make it available to you.
Yes, please. So for those who would need them, he will make it available for us. Zerubbabel, please, you have a question since your mic is on.
Yes, please. Yeah.
All right.
Thank you so much, Kofi, for this insightful presentation. Please, I want to ask, is betting an investment?
Yes, it is an investment. So the first thing you have to find out, what is investing? In investing, you commit something into a venture that you'd want to earn a return. So if you look at the way betting is structured, I know the way the platform is. So for example, if you have an odd of, let's say, 1.5, all right, what does it mean? It means that you want to earn a return of 50%. All right. If you are going to a bet of let's say 1.3, it means you want to earn 30% at a go. So in the betting, you are committing money into an act that you're expecting a return. Okay. That is an instant return that you are looking for. But in our world or in our part of this investing process, we have a gradual process that you can earn those returns. But betting, like lottery, is an instant return you are looking for. So betting is investment.
Okay, thank you.
Thank you very much, Mr. Kyei. Please, if there are no other questions, I want to believe that we have taken a lot from the presentation today. And like famous investor Warren Buffett said, that you don't have to invest in something you don't understand. That means that we are to really do a thorough research. I remember last month when Mr. Kyei took us through stocks, he mentioned the same thing. He said that you have to do extensive research. You have to do a personal research into the investment portfolio you're looking out for. So it's very important that as young people, we don't rush into anything at all. We take our time and then put in the work of researching into it. Thank you very much, Mr. Kyei, for this insightful presentation. If there are no questions, I want to mention that the slides will be made available. Okay, I'm seeing a question in the comment section from Exalted Palace. I don't know your real name, that's why I mentioned that name. It says, thank you, sir, for the presentation. Examples of the go-to places for a thorough assessment for investments. Please, are you asking a question? Like, do you want to know the examples of the go-to places? I think that's what he wants to know. So say, if you could help him with that. He's asking that he wants to know the examples of the go-to places for a thorough assessment for investment.
I don't think I'm getting the question probably. So can you?
Okay, so Exalted Palace, could you please unmute yourself and be clearer on your question? Thank you very much. And Veronica, you said you have a question too. Okay, so you can please proceed. Veronica, please, we are hearing you.
Okay, so I want to ask, what are the risks and rewards associated with this investment?
Please kindly come again. Your line was breaking.
Okay, I said, what are the risks and rewards associated with this investment?
If I
What are
got
the
you, what are the risks associated with investments?
Yeah, and the rewards.
The risks and the rewards. Is that what you're asking, please?
Please.
Hello, Veronica.
Hello.
Yes, please. Are you asking about the risk and rewards associated with investing? Is that your question, please?
Yes, please, that's what I asked.
Yes, please. Thank you.
Okay, so in any investment, we say that the higher the risk, the higher the return. I don't know whether you're familiar with that phrase. So in the investment space, we have the stocks which give minimal risks. We have fixed income investments that uh, no stocks give higher risks than fixed income investments. So with the levels of investments, normally I'll talk about putting your money in a bank account, which is the safest investment you can do. All right, the safest, even though you will not be getting higher return, it's the safest that you can do. Then when you realize that you are keeping your money in there for a longer period, whereby you are losing value, okay, you're losing value on the investment, then you go a notch higher to put it into what we call treasury bill. So treasury bill has also an element of risk. And in recent times, we have got to know that treasury bills risks sometimes are even higher. Okay. And with treasury bills investments in recent times, as we all saw with government of Ghana, okay, a lot of people were saying that treasury bills or treasury bill doesn't have any risk. But we've got to understand that investment in government treasury bills also come with its own element of risk. So the measure of risk that you will be getting or you have to expose yourself to in treasury bill is the same measure of return that you'll be requesting, okay, or you'll be requiring from investing in treasury bill. Normally, treasury bill rates, normally, until recent time, treasury bill rates have a premium over inflation. So what this means is that when you invest your money in treasury bill, you're expecting to get a cushion. A cushion is what we call the premium. So treasury bill rates are expected to be higher than inflation, so that if you have your money in treasury bill, you know that at least you have a little return. So some time ago, when treasury bill is 17%, you have inflation around 15, all right, or 14. So that the 3% will be what will be your return on the investment. Okay, so when you are not satisfied with the return you are getting from these treasury bills, then you can go a notch higher to what we call the bonds. So bonds will have their own categories. We have the government bonds, we have the corporate bonds, and some municipal bonds, and so on. And all of them come with their own risks. Okay, so with the government bond, which is termed as has a lower risk than the corporate bonds. Corporate bonds have a higher risk because you know you have to do a more thorough research into corporate institutions, unlike government. Corporate institution, you need to look at the management, you need to look at their financials, you need to look at a whole lot of their location, the type of business, a whole lot of things that they are doing. Okay, a government compared to corporate bonds, these days, you can even say that some corporate institutions have a lower risk than government, right? Because of the situation we find ourselves. So, for example, if MTN or Scancom Ghana says it's issuing a bond, okay, with the track record of MTN, with the track record of their processes or the way they conduct their business, you can easily say that, oh, you can be easily comfortable. You can say you can easily be comfortable with investing your money even with MTN than the government of Ghana. It's based on the risk assessment on the two sides, because the government of Ghana in the current situation, even by the mere fact that the president is not assenting to the LGBT bill, we are seeing a depreciation of our currency. It tells us a lot that we are not in a very comfortable situation. All right. So risk assessment goes a whole stretchy way. All right. Then the corporate, I've explained the corporate bonds and municipal bonds, which is not very common in Ghana. So municipal bonds, so like Ghana South Municipal Assembly wants to issue a bond to develop the municipality. So an assessment is done within the municipality. Normally, in the advanced economies, these bonds are very, very good bonds that investors are all looking out for. So with the municipal assemblies, they can easily invest in. Then you can jump a notch higher to equity. So equity, the risks involved with equity investment is higher than the rest because it is expected that when you're a shareholder, you own the company, you are part of the company, you understand what is happening in the company. So therefore, when the company is going bad, you should bear with them, as you may put it. And if the company is going well too, you're enjoying their profits through dividends and capital appreciation and so on. So there are various investment avenues and the risks that they carry with them. But when you talk about risks, it's a very big topic. It's a very big topic because we have the market risk, market risk. We have liquidity risk, concentration, credit risk. There's a whole lot of risks that we can talk about. Inflation risks, and it is a broad topic. We can have that on a different date when you want to talk about risks on its own. But the basic thing is that every risk and the return. So if you are going for higher risks, it is expected that you get a higher return. Okay. If you are going for a lower risk, the risks will be lower. So basically, that is it I have to say about the risks and the return.
Okay. Thank you, Mr. Chair.
Hello, Jonathan. You can ask your question if you can hear me. Jonathan.
Yeah, hello.
Yes. Yeah.
Thank you very much. So I was asking with the analogy you gave with regards to the hospital situation, that you go there when you have a problem. So I want to know some places that you would recommend with regards to getting financial or investment advice. I mean, broadly. Thank you.
Okay, so I think I'll start with the sponsors of Young Investors Network. All right, those are the place that I would recommend that you can go to. I was just looking for one of our flyers. So on top of my head, UMB Stockbrokers, UMB Investments, Ashfield Investments. Jessica, can you help me? So these are institutions that are they are in the good books of SEC. So here's walking into any of them, their premises, and they can assist you. So Waikari Capital, Republic Investments. Yeah, so you can I think Bora Capital too, they'll be coming in. Yeah, so these investment firms are some of the areas that or some of the places that we can recommend that you go to. Jonathan, I hope you're okay.
Yes, please. Thank you.
You're welcome.
Thank you, sir. I think in the comment section too, Sir Joshua has put Stanbic Investment Managers. There's
Yes,
also one from Babel, IC Security and Nymed Capital. So
very good,
I'm
very
sure
good.
those places too you can visit
Yes, yes.
them.
Yeah, thanks
There
for
is
that, Josh and Zerubbabel.
there is also another question in the comment section from Stephen. He says that, Sir, thank you for your presentation. Please, I want to ask, there's been some investment platforms recently that people invested money in, like Miner, etc., which promise higher returns. Some investors earned while others also lost. If I'm an investor who likes to take risk and I invest in an investment like aforementioned, knowing certainly that it's risky and I lose money, does it make that does it mean that I didn't make a wise investment decision, or I still needed good research and investigation? In simple terms, must all investments be researched into, or some only require the level of risk one is willing to bear? So, Sadly, that's his question.
That's an interesting question. So, very interesting. So, what it is that, for we, the traditional investors, we do not go into any investment without having to do a check. We always advise that you investigate, you do a proper research before you go into it. There are some people, as I mentioned earlier, there are some people, even in betting, they do analysis. You know that. So they sit down, check the trend and all those things. And that is what the traditional investment, that's what we also do. You have to do checks and all those things. It is dangerous for you to do any investment without any analysis. It is very dangerous. You may go into it and win, but I can assure you that it could be a one-off thing. You may go again and it may not be good for you. So it is important that in any investment that you do your background checks very well on the company, on the products, on the assets, everything before you go. Okay. For any skillful analyst, there are some areas that you look out for. So as a broker or as a trader, right, when the market is moving very fast, when I pick the financial statements, there are areas that you can look at quickly to hop into the market. Okay, so we have to be skilled, we have to be trained, we need to understand what we want to do. Okay, you may not have time to do all the research, but as I said, as a skilled trader or as a skilled investor, when you pick the analysis, there are some areas that you can easily see and say, no, let me go into it. So for us as traditional investors, we won't say that you should just go and do investments without any analysis. So what happens if investment goes bad? Okay, so this is Veronica again. So investments, that's why we are talking about risks and investments. So for every investor, you should understand that there's risks involved. There's risk involved in the investment. So whatever it is, you can gain and you can lose. But systematically, it is important that you do your research. All right. With research, it is possible. It's highly possible that you will not go wrong. Okay. So basically, as that.
Thank you very much, Mr. Che. So please, there's another question from Amos. He says that is there risk associated with treasury bills? Is there risk associated with treasury bills?
Okay. So I think I mentioned it earlier. There's risk, but it's a bit minimal. We spoke about government. I compared government investment with MTN, where I said an assessment with government in the current situation compared to MTN, which has a very good record, at least in their operations. We can say that MTN can issue a bond that will have a lower rate than government because of what we are going through now. All right. So government treasury bills have risks. And as we saw in recent times, the rates on treasury rates of treasury bills rose as high as more than 40%, which is very unprecedented in the country, which it shows the level of risk. Once the rates are going up that high, it shows that there's a huge sense of risk in it. So there's risk in treasury bills.
Yes, please. Thank you very much. Amos, I'm sure you've been answered at this point. Okay.
So we have less than a minute to go. So
Yes,
Maybe
please.
if
Please,
there are more
let's-
questions, we can join there so that I try to answer them.
yes, please. I think there are two more questions.
Okay.
So at this point, do you think we should handle them or should we join again?
We can start handling them when it goes off
Yes,
there.
please. Yes, please. So I think Amos has come again with his question. He says that is the risk associated with treasury bills regular? Like he's asking if it's regular.
The word regular, I think you should clarify it.
Yes. So Amos, please kindly do that for us. And Veronica is asking, please, is the government regulated by any government agencies? Oh no, I think she made a mistake. She said, is the investment regulated by any government agencies?